What's up, UTG family? It's the Urban Trader back again with another video, and today I will be doing a weekly market recap of the leading economic events from last week. In today's video, I will cover economic uncertainty, geopolitical events, corporate earnings, safe harbor assets, and the fall of stock prices. Let's talk stocks the Urban Trader's way. This week was filled with volatility from positive news that led to the SPY rally and then global geopolitical events which caused an adverse market reaction, dropping all major indexes by greater than 1%. On Monday, the White House announced that the U.S. and China had reached a trade agreement which led to a rally in the market and overall positive outlook on the economy. While SPY ultimately did have a red day, the red doji candle did signal further continuation and increase. Tuesday further showed promise for corporate earnings, where AMD and Oracle both showed an increase due to positive corporate earnings as well as good corporate guidance for the future outlook of their company performance. However, during the middle of the week, we had geopolitical news which overtook the week. On Wednesday, a Boeing 787 airplane in Western India headed to London crashed shortly after takeoff. The plane crashed in a residential area where only one of the 242 passengers survived. And the next day on Thursday, we have more geopolitical news where Israel sent a preemptive launch to Iran and then declared a state of emergency, which caused markets to be down in the pre-market on Friday. The Dow was down 1.8%, NASDAQ was down 1.8%, SPY was down 1.1%, and the VIX Volatility Index was up 1.8%, which signaled further fear and uncertainty in the market. However, as today is Sunday, on Friday night after the markets closed, Iran did launch a retaliatory attack against Israel, and there has been further conflict over the weekend. We'll have to wait to see what markets look like tomorrow morning in the open. That's just a little current update to what may be happening going into next week. Back to the video. Events ultimately led to an inflow of safe harbor assets in the economy, which signaled a risk-off sentiment in the market, which was confirmed by the 7 to 10% increase in oil prices as well as the 1% rise in gold values. In investing, risk-off refers to a market environment where investors prioritize capital preservation over potential returns due to increased uncertainty or negative economic indicators. Investors become cautious and move away from risky assets, selling off stocks and high-yield bonds and moving to safer assets like government bonds, cash, gold, and treasuries. Focused on capital preservation, they want to protect their investments from current losses, which can be triggered by negative events like economic news, negative earnings, and global tensions. Indicators of a risk-off sentiment in the market include markets falling, bond yields and gold values rising, safe harbor currencies increasing, and talk of market uncertainty. While a risk-on environment refers to an environment where investors prioritize growth. Investors are optimistic and confident, move to risky assets such as high-yield bonds and stocks as well as emerging markets. They are focused on growth and want to maximize the potential of any returns, can be signaled from positive sentiment from news or monetary policy. Just remember, when investors are feeling confident, they are more willing to put the risk on, and when investors are not feeling confident, they want to take the risk off. Now let's get into some market context and indicators. The S&P 500 consolidated between 6,000 and 6,045, ultimately before closing below 5,980 on Friday. While weekly events did ultimately contribute to the downside in the market, the S&P is only 2% away from all-time highs. The VIX Volatility Index spiked from 16 to 18 to 20, which signals further market uncertainty and fear. The only positive news in the market last week was the jobs report, which signaled more jobs added in May and a 0.4 increase in wages. Conclusion: global conflicts dominated market news by the end of the week, erasing any early market optimism from U.S.-China trade talks as well as company earnings, causing the market to enter a sharp risk-off phase. As we enter next week, we should try our best to assess the market based upon last week's economic indicators as well as global tensions to put ourselves in the best position to take advantage of the market this week. Thank you guys for coming to another video. If you found any value, please like and subscribe. It's the Urban Trader. Thank you.